Hi everyone, and welcome to the first episode in our February tax tips and updates series. If this is your first time with us, we make new videos each week on personal finance topics in a way that's straightforward and easy to understand. Today we're going to be looking at some of the important updates and tips you should know as a student filing taxes in Canada. If you've ever wondered whether or not you need to file, what tax credits or deductions you're entitled to, or who can claim your tuition tax credits, then this video is for you. As a student, there are deductions and refundable credits that you can use to help lower your tax burden and increase your refund. If you weren't sure whether or not you should file, I'm going to show you 6 reasons why either you should file or you must file a tax return this year. First up is getting credit for your tuition. One of the most enticing reasons to file a tax return as a student is to claim your federal tuition credits. If you attended a post-secondary school in Canada, either on a full-time or part-time basis, you'll likely receive a tax slip called the T-2202. It summarizes the tuition fees that you paid for the year, and here's an example of what it'll look like. Depending on your province, you might also be eligible to claim an additional credit called an education and textbook amount. Most provinces have eliminated it, but here's a few areas that still offer the credit to students. So how does this credit help you though? Well, if you earned income, you can use your tuition fees to lower your taxable income, which is either going to reduce your taxes owing or potentially increase your refund. Even if you're not working right now, you still want to file because your tuition credits can be banked and carried forward. On top of that, if you don't file this year but decide to file in a few years from now, you actually need to go back and file for every year you missed that you received a T-2202 in order to use those credits. A really common question is, what if someone else paid my tuition? Can you still claim it, or do they? Well, that depends. If your tuition was paid by someone other than family, like your employer, or the employer of your spouse or parents, or maybe even the government, then even if the school issued you a T-2202, you are not allowed to claim it on your tax return. What if you're an international student? As an international student, unless you're considered a resident for tax purposes, you cannot claim your tuition on your tax return, and you also cannot carry forward those credits to be used in future years. Another reason to file your tax return is student loan interest. Now, for many students, tuition fees can be the first and in some cases, the start of a long-lasting debt as we exit our teenage years. Now, if you're lucky and studying in Ontario, for the 2019-2020 tax year, undergraduate tuition fees actually went down by almost 10%. But in every other province, they either remained unchanged or increased almost as high as 8.5%. A survey by Stats Canada found that at the bachelor level, over 50% of students in Canada finance their education. And out of those, almost half graduate owing in excess of $20,000. But did you know that the interest on your loan can be tax deductible? Just be careful though, a common misconception is that all student loan interest is deductible when in fact, that isn't correct. In order for your student loan interest to be deductible, then according to CRA, you must have received the loan either through the Canada Student Loans Act, Canada Student Financial Assistance Act, Apprentice Loan Act, or a similar provincial law. So what does that even mean? Well, for example, if you took a loan out from national student loans like OSAP, then the interest on that loan is deductible on your tax return. But if you took a student line of credit out or a student loan from your local bank, for example, then that isn't. Interest on the student lines of credits and loans are not eligible to be deducted on your tax return. Another great reason to file is the Gst Credit. If you're 19 years of age or older, then you could be eligible to receive the Gst Credit and you don't need to be working in order to qualify. Now, if you're 18 this year, turning 19 next year, you should still file so you can already be set up to receive the credit automatically once you turn 19. As a single student, you could be eligible to receive a little over $450. But what if you're an international student? Well, if you're an international student and you're not considered a resident for tax purposes, then you would not qualify for this credit. Another great reason to file is receiving a tax refund. If you worked but earned less than the basic personal amount, you're likely owed a refund of your taxes paid. The basic personal amount for 2019 was $12,069, which basically means if you made that amount or less, your income is considered tax-free. Any taxes collected on your behalf from your employer will be refunded to you once you file your income taxes. Here is one example of why you must file even if you didn't make any money. Disposition of capital property. If you disposed of capital property, you must file a tax return even if the sale did not generate income. Examples of capital property that you would recognize are real estate, land, stocks, bonds, mutual funds, anything that could potentially create a capital gain or loss. The only exception to this would be if you sold investments that were held within a registered account, like a tax-free savings account or an RSP, for example. Another reason I would encourage you to file your taxes is RSP contribution room. If you earned income, even if it was low, filing your return will generate RSP contribution room that you can carry forward for future years when your income is higher. If you're not familiar with RSPs, then I would encourage you to check out our video that explains the basics of how the account works. Now that you know whether or not you should file, where and how do you file your tax return? Well, there's a few options available to you. You can file in person with a tax professional, or another alternative is to file your taxes online yourself. I'll include a link to the Canadian government website that has links to online software to help you easily complete and submit your tax return online for free. Just keep in mind the deadline to file your taxes this year is April 30th. This wraps up our first video in our February tax tips and update series. Stay tuned for our next video where we take a closer look at taxes within ETFs and mutual funds. And we're also going to discuss some strategies to consider when building your investment portfolio. Thanks so much for watching, and we'll see you back here on Thursday.